Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
We'll be discussing Fairfax's plan to acquire a stake in IDBI Bank in a $5.5 billion deal, a major move in the banking sector. And we'll also cover the Reserve Bank of India's upcoming meeting with bank executive directors about FCNR mobilization ahead of the policy announcement. Plus, we'll look at the currency markets where the rupee opened 3 paise higher at 96.17 against the US dollar. Lots to unpack today.
Let's dive right in, Vijendra.
The government will sell a 30.48% stake in IDBI Bank to Fairfax Holdings at 81 rupees per share, raising about 26,620 crore rupees. LIC will divest another 30.24%, totaling 53,000 crore rupees in foreign investment. This marks the largest foreign investment in an Indian bank, and regulatory approvals from the Reserve Bank of India and the Competition Commission of India are pending, including a fit and proper assessment for Fairfax and merger requirements with CSB Bank.
And the market's already responding to IDBI Bank shares rose nearly 3% to 86 rupees 54 paise, rebounding from a 52-week low of 61 rupees. LIC, which bought a controlling stake in 2019 for 21,624 crore rupees, will gain around 26,440 crore rupees from this sale. The government aims to raise 80,000 crore rupees via asset sales this fiscal year and has collected about 20,272 crore rupees so far, with further divestments in companies like LIC and Coal India also under consideration.
Here is another significant update. The Reserve Bank of India will meet bank executive directors on Wednesday to accelerate foreign currency non-resident bank deposits, known as FCNRB, aiming to attract 30 to 40 billion US dollars under temporary relaxations valid until September 30th.
This push follows government and RBI meetings encouraging banks to target non-resident Indians, especially those holding over 1 million US dollars with digital strategies. It's crucial as the rupee has weakened over 3% this fiscal year, reaching a record low against the US dollar. Banks reported fresh FCNRB deposits of 166 million US dollars in April, with the total outstanding at 33.92 billion US dollars. FCNRB accounts make up about 1/5 of the total 165.59 billion US dollar NRI deposits.
Now let's discuss another important development. The Indian rupee opened 3 paise stronger at 96.17 against the US dollar, helped by softer US inflation data which lowered expectations for a Federal Reserve rate hike. The probability of a 25 basis point hike in July dropped to 16.6%, easing dollar strength, but rising crude prices near $86 per barrel are limiting rupee gains.
Also, geopolitical tensions, especially the Iran-related oil tanker attack, have pushed Brent crude prices over $85, increasing India's import bill and dollar demand, which pressures the rupee. Consequently, domestic markets are reacting negatively, with the Sensex down over 500 points, and the rupee is expected to weaken further toward 96.4 to 96.5 in the near term.
Let's look at another key development. Gold August futures fell by 0.55% to rupees 1,41,471 per 10 grams, despite US inflation easing to 3.5% in June. The softer inflation cut expectations of aggressive Federal Reserve hikes.
Yet, the ongoing US-Iran conflict, with military strikes and a naval blockade, keeps crude oil prices high near $86 per barrel, injecting uncertainty. This geopolitical risk dampens precious metals despite weaker inflation data. Technically, gold trades below its 21 and 55-day moving averages, showing weak buying interest. Support is at 1,41,400 rupees, resistance at 1,43,350 rupees, and silver shows similar bearish signals.
Analysts suggest booking profits on rallies but holding long-term. The balance of softer inflation, Fed signals, and geopolitical tensions will shape precious metals markets going forward.
Now let's discuss another important development. Udaan raised approximately 160 million US dollars through a mix of fresh equity, new debt, and converting existing bonds into equity to strengthen its balance sheet ahead of a planned public listing.
This restructuring simplifies their capital and boosts financial flexibility, which investors in India's B2B e-commerce sector will view positively as Udaan moves toward a public market debut. Additionally, over the last 10 quarters, Udaan's revenue grew at a compound annual growth rate of about 25%, with significant margin improvements and reduced EBITDA burn, signaling operational progress, and their growing private label portfolio and profitable clusters enhance margins and operating leverage, reinforcing confidence in their sustainable growth potential before listing.
Now let's discuss another important development. The 10-year Indian government bond yield jumped to 6.7945%, its highest since June 2024, driven by a 9.6% surge in Brent crude to $87.18 per barrel amid US-Iran tensions. That oil spike heightened global risk, weakening the rupee to 96.2 per US dollar and dragging the Mumbai stock market down 0.6%, reflecting investor caution amid geopolitical instability.
Despite June retail inflation rising to 4.38%, economists expect manageable inflation and the Reserve Bank of India to maintain its pause on rate hikes through fiscal year 2027. Meanwhile, foreign investors pumped nearly $6.5 billion into Indian bonds since June, with rising overnight index swap rates signaling concerns over global interest rates and oil-driven inflation pressures.
Here's another significant update. Regency FinCorp's board approved a secured non-convertible debenture issue of 40 crores rupees, launching on July 14, 2026, with a 12-month and 5-day tenure and a 14% coupon paid monthly.
This issuance, through private placement and listed on BSE Limited, strengthens Regency's capital for secured lending expansion and digital growth, reflecting investor confidence in their strategy. Notably, 95% of principal repays at 6 months, remainder at maturity, with a security cover ratio of 1.25 times outstanding dues, ensuring strong investor protection, and the appointed trustee, merchant banker, and rating agency provide oversight, while a 5% penalty per annum applies on delayed payments over 3 months, highlighting disciplined credit risk management.
Moving to our next story, Andhra Pradesh approved a pooled municipal bond framework to raise over 1,010 crores for urban infrastructure, covering drinking water, sewerage, roads, and more. This reduces reliance on grants and creates a sustainable funding source.
This aligns with the union budget's incentive of Rs 100 crores for bond issuances above Rs 1,000 crores, encouraging states toward financial autonomy and efficient urban infrastructure financing. A high-level committee will oversee the process, including merchant banker selection and bid evaluation, ensuring transparency and financial discipline across municipalities. And the pooled approach strengthens creditworthiness, attracts institutional investors, and builds capacity in urban local bodies, addressing infrastructure needs beyond traditional budgets.
Let's look at another key development. Delhivery's subsidiary, Delhivery Financial Services Private Limited, just got RBI approval as a Type 2 non-banking financial company, non-deposit taking. This lets them offer credit, payment solutions, and insurance, directly supporting their logistics network.
That's significant. Integrating finance into logistics can improve cash flow for truckers and MSMEs, reducing risk and enhancing operational efficiency in the sector. They incorporated the subsidiary in January 2026 and plan to invest up to Rs 12 crores, owning 100% of the shares. It's a clear strategic push to strengthen their core logistics business, leveraging Delhivery's data and partnerships to boost liquidity access and value for their logistics partners, creating a more resilient ecosystem overall.
Here's another significant update. India cut its US Treasury holdings by 22.5% from $232 billion to $181 billion by April 2026. This 6-year low marks RBI's move to diversify reserves amid geopolitical risks.
This shift aligns with global trends. China also reduced US Treasury holdings by 12.44%. Markets see gold as a safer, independent asset, especially after events like the Russia-Ukraine conflict highlighted risks in dollar assets. Meanwhile, India's gold reserves rose by 33.9% to 881 metric tons, and RBI repatriated over 100 metric tons recently, aiming to secure assets domestically against international freezes. Despite increasing gold, the US dollar remains dominant. Analysts call it gradual diversification, with central banks cautiously boosting gold and reducing dollar assets over 5 years, balancing liquidity and geopolitical risk.
Here's another significant update. India's small business credit grew by 13.4% year-on-year, reaching 49.2 lakh crore rupees by March 2026. Sole proprietors drive 80% of this portfolio, with active loans totaling 7.5 crore.
This growth reflects a strong macroeconomic environment supporting MSME credit. The dominance of loan against property at 27.1% shows a clear preference for secured lending in this sector. Geographically, the top 10 states contribute 72% of the portfolio. Andhra Pradesh leads with 16.5% annual growth, while regions outside the top 100 cities grew at a compound annual rate of 21.6%. Asset quality improved too, with loans at risk over 90 days falling to 4%. Tamil Nadu shows resilience, holding 10% of the portfolio with an 11.6% annual increase, indicating larger loan sizes in the MSME segment.
That wraps up today's episode. Thanks for tuning into the DebtCircle podcast, and we'll see you next time.